Hello everyone, this is Ed King from MOGFX. So today we are going to deal with price action. So price action trading is a style that is based on naked charts. So what we mean by naked charts, we mean there's no use of indicators. No indicators used except moving average of 90 and 14. Great. So price action basically is based on naked charts. So the decision to open a trade is mostly based on 4 things. 1, chart pattern. 2, trend lines. 3, level of support. 4 and resistance. 4, candlestick patterns as well. So we just use candlestick patterns for what? Confirmation. Great. But before we start with price action trading, you need to know how to locate HOD, which is high of the day, and LOD. You'd always also be able to determine uptrend, downtrend, and consolidation of the pairs of the currency pairs. Because all of what we talked about above, chart patterns, trend lines, support, resistance, candlestick patterns, they have to appear on any of these places, either the high of the day, low of the day, uptrend, downtrend, or consolidation. So if you don't know this, it's no use of you trading using price action. Next, we determine, Next, we determine chart patterns with moving average to a enter trades. So basically we have a lot of chart patterns. Here we have some that I outlined to be the ones that I think are very important. So here we have reversal patterns, continuation patterns. So we are going to deal with a few so that you guys can get an idea on how to correctly trade these patterns, because most of you don't really know how to correctly trade this space. So I'm going to give you the secret to how you are going to trade reversal patterns and continuation patterns. Reversal patterns just means if it was an uptrend, because of this shape, it will reverse into the opposite direction. Continuation patterns just means if it was in an uptrend, even though it makes a retracement, it will still continue in an uptrend. So basically I'll start with the double bottom, what you see, the chart that you see here, chart pattern that you see here. So basically, let's go back to the notepad. Let me quickly remove this. So basically, double bottom will have a shape like this. So how do you trade a double bottom? We are going to go into how to correctly trade the double bottom. So our double bottom sorry guys, our double bottom, we trade it like this. Here there will be a level of resistance, and then the double bottom will break that level of resistance. It will retest back to the level of resistance that became a support, and will shoot up higher than the retest. So there is a confirmation that we'll be using the moving average of 90, which will be running something like this. So if this second leg crosses the moving average 90, we place our first buy there, and then we aim 20 to 30 pips, we take profits there, and then we wait for it to retest. Once it bounces off this support again, we place our second buy, which will be a bigger buy. So that is how we trade the double bottom. So let's go look at the real market, how it really looks within the real market. So this was, let me quickly remove that. So this was gold setup that I also gave you guys a signal on in the group. So just look at the double bottom it formed. So there was a bearish movement down, so it formed double bottom. So there were our level of resistance. Let me just zoom in. Okay, sorry, I can't zoom in, it's refusing, but if you zoom in, you'll see there's a level of resistance there. So the second leg of the double bottom, it broke through the resistance, and then it made a retest, and then it made a bigger buy. So we buy where the second leg crosses the moving average 90. Moving average 90 is the blue line. We buy there, and we aim 20 pips. I think this is more than 20 pips because it's in daily chart, and then it makes a retracement. Once it bounces off the second the support again, we buy again. So this is how the double bottom works. This is how the double bottom works, guys. Any chart that I give you, you can check. I also gave a USD get. This is the other signal, USD get, I gave in the group. So you can see this is a double bottom. This is a double bottom. So what it does is it breaks the level of resistance, and if it moves past the moving average 90, we place a buy of 20 pips, wait for it to retest back to the moving average or the level of support, and then we place a bigger buy. That is how we use double bottoms. I hope you guys get it. If you don't get it, you can DM me so that we can still analyze other pairs. So it will come down from the W, move past the level of resistance, and cross the moving average. We place a buy of 20 pips, it will retrace back, and then finally we place the bigger buy. So now that we are done with double bottoms, we can move on to how to correctly trade head and shoulders. This is also one of the patterns that give traders headache. So we can look into how to correctly trade head and shoulders. So let us go to our notepad. So the head and shoulders have this setup. They have such a setup. So how are we going to know it's a sell? Because with head and shoulders, we sell at the second leg of the shoulder. So basically what that means is that we need indicators to know when to sell. So if we have something like this, and this is our level of support. Let me just redo that. So our level of support will be there. So, and then we will have a line of a trend line that will draw through there. The trend line must touch 2 points. So here, let me just change color. We will have a moving average of 14 guys. So any chart pattern that has a bearish movement will have moving average 14, and any chart patterns that have a bullish effect will have a moving average of 90. So our moving average will run through here. Are we together, guys? So when do we sell? We sell when our second leg crosses the moving average. That's when we sell. So we wait for it to pass to cross our moving average, number one, and number two, it will also cross our support level. Let me just redraw it because it's a mess. So we'll have head and shoulders. So our support level will be there, and then our moving average of 14 will be there. So if this second leg crosses both our support and moving average, we place a sell here, stop loss above, take profit 1, take profit 2. Usually I'll place 40 pips. First take profit 60 pips, take profit 2, and stop loss we'll just place it at 20 pips for a head and shoulder. So let's go look how it see how it looks within a real market. So this is how the head and shoulder looks like. So this was a signal I also gave to one of my students. So this was USD ZAR on 1 hour. So as you can see, it formed a head and shoulders, and this was the level of support. Our moving average of 14, as you can see, is already placed. So we are just waiting for it to break this trend line plus our moving average plus the support. 3 heavy confirmations. So it will break this trend line, touch on the trend line here, it touched point 2 and point 3, you see, and then our moving average was broken plus the support. So we sell here. That is how you determine a head and shoulder. So guys, I hope you get it. This is very much important. Let me just repeat. Head and shoulders, you find your support, you have to draw your trend line, you wait for your trend line plus your support trend line plus your moving average to be breaking downward, and then we sell. So that's how we determine the sell on head and shoulders. We can even see how many pips is that. That is more than, that's a lot of pips. Let me just check how many pips is that. That is almost 200 pips. So it was a lot of pips. So this is the head and shoulders. So we can look at some continuation patterns because we already looked at reversal patterns. So we can look at the rising wedge. I also gave a signal out in the group of this pattern. So guys, you have to remember that all these patterns, they are going to add up to the main strategy that we are going to get at the end of the week. So we have to focus on all small things that I'm going to talk about. So basically, sorry for that. So basically we have a down movement with a heavy down movement in the rising wedge, and then a small movement up, and then a sell. So basically this is how the movement was. So I'm waiting for GBP USD on a daily chart to move down to get a sell, because a rising wedge, you have a rising wedge, we have to have a heavy downtrend movement plus a small uptrend, and then from there we sell. That's a rising wedge, sorry. So basically that's a rising wedge. So a next pattern we'll be looking at is the ascending triangle, guys. Ascending triangle. Basically the ascending triangle will see on the, I also gave out this signal, you will see on the USD chart if you go back to 3rd of January. So this is an ascending triangle. So what an ascending triangle says that is, when you have an ascending triangle, the point that it wants to make is that there will be a sell after the ascending triangle. So just check that cell. This was an ascending triangle chart pattern, and after it formed, there was a breakdown from the downward trend line, and then it formed a sell that was more than how many pips? 100 pips. Just imagine 100 pips. So that's a lot of money. So guys, I hope you guys caught some of the patterns. There are still a lot of patterns we can look at, but then because of time, I usually want to make the video short. You can DM me for more info. Thank you guys.